Hi, everybody. Welcome to the VeriDAO channel. I am Lisa Davis, and today we've got Trey from the VeriDAO with us, and also the only Reggie Middleton to discuss Coinbase's recent Q2 shareholder call. So we'll be right back right after this. Welcome to the VeriDAO YouTube channel, both of you. Trey, how are you today?
Doing real good, Lisa. Thanks for asking.
Great. Reggie Middleton, how are you today?
Hi. I'm a little sleep deprived, so if I sound like it, it's because I am. So,
You're
fair
a
warning.
very busy man. So we wanted to have you on today. We saw some of your tweets, and I think the world, or at least the crypto Twitter world, was quite abuzz after the recent call, after Coinbase had their shareholders call. And it seems like they might have left a few things out of their shareholders call, or at least from your Twitter posts, I thought we might address. So I just wanted to get some of that feedback so we can educate people on some of that.
I think that Coinbase, well, here, let me start politically correctly. I'm not knocking Coinbase management. I think Coinbase management is doing a pretty good job. Okay. They got punch drunk at the Capitol Punch Bowl, like many companies did. So they went public. The IPO went very well. I think they had up to $105 billion valuation. They got lots of money at a very high price. And then everything went downhill from there. And you need to understand that they went public at a time where the government was giving direct transfer payments to both private citizens and corporations, literally just free money. They dropped interest rates to right above zero. Real interest rates were negative, and they were literally just QE to infinity. So when you do that, capital is plentiful, and the responsibility for the deployment of capital goes down the tubes. Coinbase management apparently either didn't know that or forgot about it, or were just basically punch drunk. That is not indigenous to just Coinbase management. Many companies do that, and many people do that. You get a lot of money, you get a brand new credit card, a $300,000 minimum. You go shopping, I can afford it. But times are not always going to be good, and you have to look ahead, particularly when the government's giving away free money and the Fed is printing money and dragging interest rates down to zero if they can. They're doing that for a reason, and that's because they see significant headwinds in the economy. When those headwinds come to the fore and they're forced to turn around, you have what Coinbase is going through. They grew too fast. They, pressed the gas pedal on marketing and advertising and hiring and R&D and technology development deployment. And those costs, many of those costs are fixed. And then on top of the fixed costs, you have the variable costs of doing trades, et cetera. So when you had the crypto winter, and basically it's nothing fancy. If you look at the history of Bitcoin, it goes way up and way down. And that's what it does. It's no surprise to anybody. So if you're surprised when it goes down, you are most definitely in the wrong business. Okay? If you're surprised when it goes up, you're most definitely in the wrong business. It's very cyclical. Okay? So when the Bitcoin went down, and it went down very hard, very sharply, and very fast, Coinbase found that it had spent too much money in growing. It was growing at a rate that was probably, or definitely actually much faster than prudent, and they were profligating their spending. So they pulled back, but because they have such high fixed costs, right, and the variable costs on top of it, that is called a high operating leverage from an expense perspective. The difference between, and this is for people who don't spend all their free time going through, business and financial ratios. The difference between a fixed cost and a variable cost is fixed. So it's stuck here. Variable goes up and down with your revenues. Okay, so if you have mostly variable costs, you have very low operating leverage, but you make less money when your revenues shoot up because your expenses go up with it. But when your revenues fall down, your expenses go down, so you lose less money. With a fixed expense. You have, let's say you get $100 in revenues, but you have $40 in fixed expenses. Okay. When revenues shoot up to $1,000, you capture all that profit. But when revenues fall down to $30, you're taking guaranteed loss. So the higher the fixed expense ratio is, the higher the fixed expense proportion of the expense ratio is, the higher your operating leverage. Okay. And the lower it is, the lower the operating leverage. And just like financial leverage, when you're buying and selling and speculating on stocks, or even physical leverage, it exacerbates things. So exacerbates gains, exacerbates losses. Coinbase has very, very high operating leverage. I don't see that mentioned in any of their sell-side analyst reports. It doesn't look like they're analyzing Coinbase from a real fundamental perspective. And I think because they think it's different. It is not different. Coinbase is a broker-dealer like Schwab and E-Trade and everybody else, except they do crypto, and everybody's doing crypto now. Okay.
Interesting. I wanted to share these. Sorry, I've changed some things on my setup here. I wanted to share some of your tweet. You said a few of the things not addressed during the Q2 call. Unfortunately, unsurprisingly, analysts failed to bring up these as well. And you talked about that profit margin. Everybody can find your full report that the team did on the boombustblog.com. And you did mention that there was an update on that as well.
Yes.
So people can find that. Do you want to go into this a little more in depth?
Yeah, actually, there are two updates, but one is not published on the blog, but I tweeted the graphics out and discussed it. So follow me on Twitter, follow me on Boombust blog. You have all the analysis. So number one, I did tweet out to, or at least I included in my tweets, the Twitter handles of the analysts that follow Coinbase, not trying to cause trouble, just trying to spread my analysis around to get feedback. Okay, not even consensus. You could disagree with it. Just tell me where I'm wrong. I think I look at things differently, and I'm pretty sure that I know this business fairly well. I think I do, but most people who are wrong think they're right. So I'm humble enough to understand that. The analysts didn't include the operating leverage ratio. One or two asked the appropriate questions during the call. They're totally disregarding the IP risks. And I understand that intellectual property is a little esoteric, particularly once it comes to crypto, where it's extremely esoteric because most crypto people don't even acknowledge it. But it's real. It's very real. And there's a lot of risk. It's my opinion that Coinbase, and not just Coinbase, but all the exchanges, are operating on borrowed margin. Basically, they're operating on rents that don't belong to them, because if there are patent holders who own the technology that they're using to profit from, and then if those patent holders decide to exercise their right, then the exchanges will either be put out of business if the courts agree with them, or be forced to pay. Okay? And being forced to pay is not the end of the world. I doubt if anybody's going to put exchanges out of business. It doesn't make sense, but it does make sense.
I think that's one thing that everybody, I think that's one of the reasons people kind of lock up when they hear your name or see you tweeting or see you mentioning their businesses. They think there's only one option, that, you're going to take them down, or there's so much fear and misinformation, but it's also about paying for the licensing. There's another option here, right?
It's another option. Here's a scenario where the exchanges would be forbidden for trading the assets based on IP. If I was an exchange, or I had an exchange, and then they're using my patent IP to compete with me, I would ask them to stop. Okay? And if their whole business is based upon IP, that does threaten their business. Okay? But I don't run an exchange. And even if I did run the exchange, there's still the opportunity where I can allow them to use the IP, but they just pay for it. This concept, the fear of me or anybody else putting somebody out of business is just a total misunderstanding and ignorance of how patents work. Okay, I could give you an example. Apple and Samsung have had a patent war since Apple and Samsung started making phones. Okay, and they put a lot of money into it. They have patent portfolios in the 20, 30, 50,000 range in terms of number of actual patents. Okay, they have not put each other out of business. Okay, and you go down the list, an iPhone has roughly 1,200 patents in it, or patented pieces of IP in it. Apple owns about 200 of those patents, and roughly 1,000 belong to other companies such as Samsung, LG, Sony Ericsson for Bluetooth, Samsung for memory, LG for screens, et cetera, et cetera. So 1,200 patents go into an iPhone. iPhone is one of the best-selling products in the world and one of the most profitable. So they're not getting put out of business. What happens is if you're using somebody's property, you should pay for it. It's really just that simple. And anybody who really disagrees with that, leave your front door open and let anybody come in whenever they wish, and they can leave whenever they wish, and they can leave with whatever they want because you believe in giving your stuff away. And when you don't believe in giving your stuff away, then you agree with the patent holder. Okay?
No doubt. So, Reggie, let's dig into your Coinbase analysis a little bit more if we can. 114 pages of detailed analysis. Tell me you didn't do that all by yourself.
I did it all by myself. It took me about 35 minutes, and I had a lunch break in the middle of it.
So you put this report out, 114 pages of detailed analysis, telling everybody who wanted to read who Coinbase was, what their business model looked like, where they came from, where they are today. And then they had their earnings call and announced to the world that they lost $1.1 billion during this crypto winter since November. And if I heard Alicia, their CFO, correctly, she said they're prepared to operate at a $500 million loss consecutively in quarters to come. How can you run a business with the expectation of losing $500 million a quarter if your revenues are only $7.7 billion per year?
Well, yeah, let me just fill in. That 114-page report was followed up by an addendum that made it very clear we expected them to lose about $4 billion for the year. Okay. And we're on track to be correct because they lost 1.1 billion for that quarter. So, 1.1 times 4. Now, that loss that we calculated included patent discussion, litigation, licensing, etc. That is very, very contingent. We have no idea if that's going to happen, if it won't happen, who will win, who will lose. But that's why you do scenario analysis. So we have multiple scenarios, and you pick which scenario you think applies. But our base case is at roughly 4 billion, and that's assuming that crypto prices increase. When crypto prices increase, Coinbase's revenues and cash flows increase because over 90% of their revenue is, or 80%, no, I think over 90%, I don't have it memorized, is transaction-based. Transaction revenues are very easy to look into. You take the price of the crypto and you take the transaction value, you multiply it. Mm-hmm. Okay, and then you take out their profit margin, and there you go. Now, we clearly said the loss was coming. When they had the loss, they had a revenue surprise to the downside. I don't know how in the world you come up with that. If you didn't know they were going to take a loss, again, you weren't paying attention, or you're angling to get their business, so you're sugarcoating things. I don't know which is which. I'm not going to point fingers. As for how they're calculating that there's going to be a rough price movement in crypto for the balance of the year. Okay, and so they're forecasting losses for the balance, and they're attempting to be slightly pessimistic. I think they're setting themselves up for a surprise 1 or 2 quarters out. Okay, what they haven't mentioned was some of the downside. Okay, one issue is their margins are going down because competition is ramping up. Binance and FTX have offered commission-free Bitcoin trading. And so if you listen to the call, they said that they're testing out subscription-based trading.
I heard that.
Very similar. I actually brought that up to, I brought that up to others who were consulting with me as to how to price transaction fees. And I said, transaction fees should go down to zero because the marginal costs of supplying these transactions are very close to zero. So I think you should charge based upon what it costs to deliver things and not make an arbitrary charge. Because when you do that, somebody's going to come in and they're going to undercut you because it costs nothing to produce what you're selling, and someone's going to sell it for nothing. And they're going to actually charge for what actually costs money to produce. And that's harder for others to replicate.
Yeah.
That's why Google gives out excellent Gmail for free. Google searches, the best in the internet, I think, for free, not the most private, of course. One of the best or probably the best operating system, Android, free, etc. Because they're doing what I call the less than free pricing. They're giving out something at negative cost, but they make a buku profits on the other side by charging for things that are very difficult to replicate. For Google, Android is not their product. Searches are not their product. Gmail is not their product. Trey, Lisa, you are Google's product.
Yeah, our data.
Okay? Right. They sell you, and they sell you to advertisers. Same thing with Facebook. Same thing with TikTok. There's a report coming out on TikTok soon. Why having TikTok and a crypto wallet on your phone is very, very dangerous. Okay, read TikTok's privacy policy. It's like a horror show. I mean, it is really, 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 really bad. Really bad.
China-based company. Yeah.
Yeah. I mean, the stuff they take from you, you opt in some of it, and other parts is not. You don't opt in. Voice prints, face graphs, voice graphs, file names, file locations. They can follow you around on different devices once they get your profile, regardless of whether TikTok's installed on that device or not. So once you put it on a device, they get a hold of your data, and then they get a hold of data on other machines as well. It's absolutely ridiculous. And of course, the company owner, ByteDance, said that that information is not available to the Chinese government. But if you do a search, you'll see that there's alleged recordings which they produced that had management recorded requesting China to get access to the data. They had to go and ask the Chinese government to get access to the data that they weren't even supposed to be given to China. But I haven't verified that, but it's interesting. What I did verify is what's easy to read on the privacy statement, privacy agreement. Wow. And it reads ridiculous. So imagine that combined with a CBDC that is programmable, or even worse, imagine that just with your crypto on your phone. It also does keylog tracing. So it traces all your keyboard movements, and it traces the rhythm of the keyboard movements. Passwords, usernames, along with file names and file locations, voice prints. Absolutely ridiculous. And that's just scratching the surface. So anyway, I'm off on a tangent, but I do that to say that I'm way off on the tangent. Let's get back to Coinbase. So with Coinbase, their margins are under attack from competition. They're almost guaranteedly going to get sued by the SEC, unless the SEC loses jurisdiction over crypto, which is very, very possible. Okay.
With what's going on, with the Ripple case.
Right. And by the way, big up, to John Deaton and that stunt you pulled, not stunt, that very
well thought out
maneuver you did with
that was
the way you aired out Hinman and the criminal statute, the rule, and the evidence. I mean, excellent job. So I just want to give kudos to John Deaton.
Well, to piggyback on that, the VeriDAO is in touch with Mr. Deaton, and there's a chance that we're going to get involved with the case. A chance at this point.
Okay, and I don't want to go into detail because I can't, and I don't have enough time. But you guys have a very good story to tell, and you could definitely illuminate the judge, illuminate the realistic aspects of the case to the judge. But off on a tangent again. You see, I'm
Yes.
scatterbrained.
Back to Coinbase. There is
Back
so
to
much
Coinbase.
going on in the world of crypto and Veritaseum specifically, but we really want to focus on that shareholders call and the points that you brought out that they were missing. And I think, like you brought up the fees and then moving away, being a lot of their income, and then them moving away from that structure, I think is important, and going into this crypto winter that they're seeing.
And we may be coming out of crypto window, but if we do, that means that their transaction volume, and the prices will go up. But they're factoring that into their projections, as I understand it, without taking giving enough credence to increase competition and increase regulation. Now they know it's coming, and I think they're aware of all the headwinds to their business, but I didn't hear those headwinds discussed. Regulation was discussed. Competition was discussed, but the IP bubble popping was not. And you see a notice that was sent from my legal representative to Coinbase, simply saying that, it is our opinion that some of Coinbase products and services may come under the purview of our patent. That's what it is. It's just a notice. So it's not a lawsuit or anything else. But we do believe that's the case. And put a lot of time into researching this stuff, a lot of time. And
Reggie,
to factor in the patent prosecution, in 9 years. So there's no reason for us to say something flagrantly. Yes.
let me piggyback on something that's topical that just came out today. Ironically, we've done some analysis at the VeriDAO of some of these entities that we know infringe on your IP. You've now given notice to Coinbase that they are infringing on your IP, and that there should be some discussions brought up about that. It's just amazing to me that the first crypto company to go IPO doesn't do their diligence on their IP. But let's just say they were, like you said, a little punch drunk by the opportunity. They got funded at a valuation of $105 billion. Hooray for us. We finally made it. We're in the big times now. So now they're starting to get lawsuits, and it's in your 114-page analysis. You go into great detail about the lawsuits that they're facing. You've given them notice about your IP. And then it was just brought up that Blackrock and Meta are being brought in as partners for Coinbase. If you give notice to Coinbase, does that mean that BlackRock and Meta are also at risk of infringing on your intellectual property?
Well, I don't want to draw a legal conclusion because I'm not a lawyer. And you know what they say about legal advice and lay people, it's worth about as much as you paid for it.
Right.
But I do think that BlackRock and Meta, if I was a manager or executive at BlackRock and Meta, I would take notice. But that's all hypothetical. If I was X, if I was Z. I think it would be prudent for them to take notice because you want to make sure that any partner that you're jumping in bed with owns the means of revenue production that you're looking to license or use. And that's just common sense. It has nothing to do with crypto or finance or technology. It's just common business sense. But again, that's my personal perspective. I'm definitely not going to say BlackRock or Meta are at risk or infringing. But if I was in charge of the company, or if I was, doing business with Coinbase, I would do an IP analysis or IP risk analysis.
Absolutely.
And I was under the impression most companies did that. But for some reason, crypto seems to be different. Nobody does it with crypto. I've said this before. I'll say it again. Imagine AMD or Intel raising a large private round or public round to build a new semiconductor fab for a brand new type of chip that's never been used before. And the people just give them lots of money and never bother to ask if they own the chip or the IP behind the chip. Would that happen?
No.
No, of course not, right? They're like, okay, well, you have a patent. If not have a patent, you have protected business practices, IP, trade secrets, etc. So, and same thing in pharmaceutical companies and biotech companies and anything that has a large technical a component to it, people are either looking for patents or some way to, if not protect the IP, to prove that at least it doesn't belong to somebody else. It's very important to find that out before you put money in rather than after.
To me, it's just irresponsible of the company to not do their due diligence for their shareholders. I mean, they're setting themselves up. I'm not a lawyer either. I'll go ahead and disclose that to the audience. But if you're now have thousands of shareholders, don't you set yourself up for a class action suit if you don't disclose something like that?
Well, I'm not a lawyer, but I did look into it. I've asked other lawyers. They've given me their opinions, of which I won't share here. But if those tweets do have rules from the SEC rule book, which I think is codified into law, of what the bar for disclosure is. And basically, as I understand it as a layperson, so again, not legal advice, not financial advice, blah, blah, blah. If the company feels that it's not material, right, to the company's operations, then they don't have to disclose it. But the final risk, the final bar for disclosure is if the investor would find it to be material. And that's where I raise my eyebrow. I put myself in the seat of a Coinbase investor. And I say, what I want to know if Coinbase got notice of a patent that is alleged to cover 90 to 95% of revenues. Would I want to know that?
Absolutely.
Yes or no? Okay. Now, that's not saying I'm not passing judgment on the merits of the claim. Okay. But I would want to know if someone made that claim, because that's not a claim that's made lightly.
Yeah, I thought this was a significant part of your questioning. Lisa, also not a lawyer Davis. I was going to change my title for the
sort of rolls off the tongue. So.
Yeah. Go ahead, Trey.
No, I was just going to say, in your report, Craig Wright is suing Coinbase. You mentioned a couple of other people that are suing Coinbase. It seems like they've left themselves open to a big attack vector, which most companies that are IPO don't do. In your analysis, was there any upside to where Coinbase is now? And if so, what steps should they take to get back on track?
Well, there is upside because Coinbase is the only public crypto exchange. I think Kraken is trying to follow, and I think Ripple is trying to follow as well. But, there's taking public money is not all upside. And we won't have to deal with the SEC. And if you take public money now, there's no argument as to whether the SEC has jurisdiction over you. And, another disclaimer or another notice, okay, not notice. What did I say that Coinbase is supposed to give?
Fair notice?
Yeah, not notice. And I must admit, let me stop using legal terms. I must admit, I've had a run-in with the SEC, and it didn't come out very well for me. And I do not like the way things were conducted at all. Okay, that is a heavy headwind on the operations of a company. Okay, and you also have public shareholders, and public shareholders are often approached by plaintiff attorneys who make money doing one thing, and that's suing. Okay. And if they could get a class formed, they make even more money in a class action suit. I'm not discussing the merits of these cases, whether they're meritorious or not, but it paints additional targets on your back. You accept these targets in exchange for a wider open spigot of capital. But you have to, bring into consideration whether it's worth it or not. Okay. I'm not going to speak for Coinbase, but I know that I think that they have put themselves in a situation that might not be easy to extricate themselves from without some serious negotiation and execution. Okay. I think it's a serious mistake not mentioning notice IP, or at least sharing with investors and analysts the risks inherent in IP and crypto, because there are a lot of people who are outside of the club, but they're still inventors, and they've created quite a few things and they've patented it. And the crypto developers have taken these ideas, which are very good ideas. That's why they were invented, and then incorporating it into, platforms and blockchains, etc. Nothing wrong with that. They're basically trying to improve the chain. That's good. Okay. But when you take someone else's idea to improve a chain, you have to pay for it. Okay. If you don't pay for it and then you build your entire business off of it, don't be shocked when someone comes knocking on the door and wants, their fair share of your entire business, because it's not your entire business, partially theirs.
Right.
Now, when I say that, it sounds like I'm talking my book, because I do have patents, but I'm not talking my book. This is prudent business management, and this is prudent business due diligence. It's just something that you need to do. And if you don't do, it's going to come back and bite you sooner or later.
Yeah. Well, I love what Messiah said the other day. He said, well, patents often are there so that an idea can be improved upon. And I think the example that he gave is, okay, we have a car. If you have a patent that makes air conditioning a part of the car, you should be paid for that idea. That's something you should be paid for. And in my mind, the Veritaseum platform not only improves what the crypto universe has done, but it gives it kind of an umbrella protection from being attacked by other legacy entities. And in my mind, it's a small price to pay to go from, okay, we're one of the biggest exchanges. We've had our IPO. Now we need to clean up our due diligence mess and go ahead and buy a license from Veritaseum. That's an easy solution to the problem they have.
I think it is. And I'm not saying they would not do that, or they would not do that. I can't speak for them. But I would do it. All contingent upon the price, of course. But it's not in the best interest of any patent holder to gouge somebody, because that's not how you do business. Even if you succeed in gouging, you only get to do business once. So, there's a balance of interest there, and there's a middle ground. It's not difficult to reach. It's actually mathematical. It's simple. They're a public company. You know what their revenues are. And speaking of Messiah's my son, for those who don't know, or one of my sons. The concept of the car and the air conditioner is easy to understand. A lot of people I hear in the Twitterverse, I've learned not to reply to everybody now on Twitter. Okay.
Good on you.
For some reason, Twitter and a lot of social media brings out a lot of, guys who, don't have the sweetest personalities. But a lot of people say you can't patent open source software. Hey, that's not true. Okay, you can patent anything you invented, period. Okay, as long as it's patentable. Let's put it that way. Okay, if it's patentable, you can't patent it. Whether you open source it or not, if it belongs to you, that's your idea. That's your decision. Number two, our patent is not a software patent. Number two. And number three, just because something is open source doesn't mean a patent doesn't cover it. Okay, they could have open sourced something that was patented. That means whether it's open source or not, it's covered. I'll give you an example. Lisa, it looks like you have a nice car. Okay, so you're driving with your nice car, convertible down, driving, hair, in the wind, playing your music.
I sold that one because crypto's down. They offered me a bunch of money for it at the dealership, so we sold it to buy.
Okay, fair enough.
Crypto's down.
Okay, before that sale.
Yes,
it was
a beautiful car.
Right, you're driving a beautiful car. You get out, you park it. You go to the store to get a nice bottle of wine. Okay, you come back, your car's gone. Someone stole it. But they take your stolen car, and they give people rides in it for free. They open source your stolen car. And they're paying Uber, they're just not charging for it. They get caught. Okay? You don't get to walk away from Grand Theft Auto simply because you gave free rides.
Right.
Right? It's still your car.
Right. Yeah.
And if you catch them, the police catch them, you have every right to press charges.
Yeah.
And to get your car back because it's your car. That's open source software that's using a patented product, device, system, method, or idea. That's exactly how it works. So just because something's open source doesn't mean you're allowed to take something for somebody else and drop it in. and say, well, we're protected because it's open source. And if you don't believe me, go steal Lisa's car and drive by the precinct. Okay? See how it works out. Man, give 3 or 4 free rides when you're with it.
Too much risk for my taste, Reggie.
I know we have to wrap up here, but there was one other thing that's really a current event that you tweeted about that I wanted to ask your opinion about how Veritaseum, the truth platform, the truth machine, may have helped stop this or be a solution for something like this in the future. And that was the you tweeted, I think this was this morning, that the Illinois federal jury convicted two former JP Morgan traders on charges that they tricked outside commodity traders with fake precious metal orders to misrepresent market demand and maximize their own profits, but then acquitted them and a third defendant of racketeering and conspiracy charges. Is that a situation where you would see, if Veritaseum was implemented in the metals markets, that we would be able to avoid those kind of things?
Well, first, let me say, I don't know enough about the case to really opine upon the case authoritatively. And I'm not a lawyer either, on top of that. But Veritaseum was designed to be true peer-to-peer capital markets. So in a true peer-to-peer capital markets regime that's implemented on a public blockchain, you get to see transactions. If you use a publicly auditable data source or Oracle, everything's above board. So in order to fake a price, you'd have to give a fake bid or multiple fake bids, and people can see that if you look. Okay, if you do fake purchases, people can see that. Okay, you can even enforce that if you make a bid and that bid is hit, you have to go through with it. If you make a bid and that bid is not hit, it's still locked into the blockchain. So you can see that pattern easily. That's the benefit and the curse of doing things on a public blockchain. The curse is if you don't want people to see it, well, you're out of luck. And there are legitimate reasons why you would not want people to see it, front running, etc. This goes into a conversation that's probably much too long to have here, but that's the privacy discussion. There are a lot of efforts to make public blockchains more private, and FinCEN has just put Tornado Cash and the public Ethereum addresses that they use on their OFAC list. Basically, they said nobody in the U.S. can use these addresses or this technology, and Tornado Cash is a mixer. So basically, like a coin join, it takes transactions, mixes them up, and puts them back out. So you know what goes in, but you can't tell, what's going out, what's associated with. Now, there are valid reasons for that, for privacy, but also you have bad actors who also want privacy. Coming down on it is difficult. A lot of people in the crypto community just say government's bad. And, there's a reason why government doesn't want that, because they don't want bad actors to get away. Now, here's the other side of the argument. Define a bad actor. Is it Reggie because he has his royal blue shirt on? Am I a bad actor because I have poor taste in color selection? Number one. Right? Number two, I fully admit there are many bad actors. I actually think this. Well, I'm not going to say it, but there's also good actors who use Tornado Cash. I'm sure if I needed privacy in a transaction, I'd use it. Okay, and if whoever doesn't believe in privacy, simply open up all your bank accounts and all your bank account information to everybody. Give all your passwords and all your bank account numbers and let everybody see it. But you don't want to do that because then people will take advantage of your private information. Right? So there's a reason for privacy. There has to be a more nuanced solution than taking a sledgehammer and just banging everything. There has to be. And I'm pretty sure that you could use the patented invention to come across with that. I'm pretty sure you could take a mixer and you can make that mixer dynamic. And it'll be very, very difficult to shut down because every time someone goes into the mixer, you can spin up new contract, new code, voila. I'm not a software engineer or a developer, but I can see myself if I were to do so. I'm not saying I am, so please don't come after me. I'm just, thinking freely. I can see myself instructing or showing how that could be put together. But
Well,
the key is you don't want to fight with the government and go back and forth. That does not make a business. That does not make a market. All that does is make you go after.
Well, that's where like Litecoin has MWeb, which is the privacy chain, layer, and then the original Litecoin. So you can go into MWeb and use the privacy mixer type thing. If you need to, it's like using cash or writing a check. If you need to use the public blockchain so that there's proof transaction, then you have that. But you can also, if you need privacy, because I want to, pay my daughter a gift or something, it doesn't have to be a bad action to have privacy in our life, then you have that option also within that. So I do have a friend that I did a video with this morning on World Blockchain Roundtable. Reggie, you've been on that show with me before, and he is one of the co-founders of Rivet, and they are continuing to post as publishers the Tornado Cash addresses. And some of the other some of his competition have pulled those, all of those, I guess, to be in compliance with, or in assumed compliance with SEC before it really even anything's been handed down or said. So,
you mean FinCEN, right?
FinCEN, sorry.
Yeah. Now, again, right, the blunt force hammer, the blunt force, mallet is not the way to handle it. I read a developer who took some F, very less than one F, right? He took dust and he sprayed the dust. He sprayed the dust from an account that he used with, with an address, right? That sent Ether to the Tornado Cash address, okay, and then used that address that sent it to the Tornado Cash address. He also used it to spray to a bunch of popular people or well-known people who had F addresses. Well-known actors, politicians, etc., corporate executives. And technically, they're in violation of the OFAC list because they now accepted money from address that did business with Tornado Cash. That's an example of, how clumsy that solution is. Wow. You can have somebody technically set up a whole bunch of people up who are totally innocent. So more thought has to be, and it has to be more nuanced. I think I got the method, right? I'm pretty sure he took the dust, he sent it to the OFAC list, he contaminated that Ethereum address, and they used that Ethereum address to send the dust elsewhere. Or he had control of one of the addresses that were on the OFAC list and then just sent the dust from that OFAC list. But regardless, he had all these innocent, popular people, apparently innocent at least, now in violation of OFAC list. And it's just too easy to do something like that. So you have to give more thought and much more thought.
Much more thought. Wow. I mean, this is where we're just in this space where it's a whole new asset. And we're learning along the way, but I mean, and I guess there's good actors and bad actors, and hopefully, gratefully, you're one of the good guys, I believe, and you're here to protect us with Veritaseum and that truth machine. So really grateful that's.
Well, I've got an exclamation point to put on the end of this. The VeriDAO put out a animated graphic of Alexander Graham Bell, who withstood 600 attacks on his patent before he was awarded the patent, and he controlled communications for the next 150 years. So stay strong, Reggie. We need you.
I'll try. I'll try. I'm actually, this is something I want to make clear. I'm going to start making this clear in all of my videos. I artificially suppress my personality to make it more mainstream. That's going to end because I get attacked anyway. So I might as well be myself and get attacked, right?
Amen.
From this point on, I want to make clear that I intend to be judged on the merits of my execution and my capabilities and on nothing else. Okay. And if, for those who judge on things other than the merits of my capabilities and execution, I will make it clear. Okay. And that means I will show someone who did not execute as well and did better, and then compare it to our efforts. And it's easy.
Time to take the gloves off.
Take a look at the Coinbase report, the 114-page report, the addendum, and the tweets that follow up. Okay, take a look at Coinbase's earnings results, and then compare it to every single sell-side report you can ever find and every crypto pundit. All of them, each and every one.
They missed it.
Right? And then wonder why I get attacked by regulators and why I have a problem raising capital, et cetera. Take a look at the patent application and what it foretold, the foresight that went into that, the products that we made and published and were working on the web in 2013 and 2014, and then fast forward to 2022, right? And see if there was true prescience and foresight there. And there are 80 public citations on the of the patent. The new ones came from N-Chain and Wells Fargo and Ripple Luxembourg. Okay, and then take a look at them. Coinbase also has citations as well. Take
Absolutely.
a look.
And you can find all of that information and more at theboombustblog.com. We'll have links in the description for that and some more information for you there. Thanks again, Reggie and Trey, for joining me today. I wanted to get this information out there and educate as many people as we can with what's going on in crypto.
Thank you, Lisa.
Take care.
All right.
Okay.